Welcome back to the channel. KLA Corp has delivered a standout Q2 FY 2026, an AI-fueled beat and raise that's turning heads across the semiconductor industry. Let's break down what drove this surge and what it signals for investors. In today's teardown, we'll analyze the Q2 scorecard, look under the hood of their revenue mechanics and geographic shifts, and evaluate their financial fortress. We'll wrap up with the bull versus bear cases to see if the AI catalyst outweighs the rising risks. The bottom line is a massive beat and raise. KLA reported record calendar year 2025 revenue of $12.75 billion. For Q2 specifically, they hit $3.3 billion in revenue and a non-GAAP EPS of $8.85, comfortably beating management's guidance midpoint of $8.72. Taking a closer look at the growth, revenue is up 7.2% year-over-year, while EPS grew 7.9%. This momentum is being fueled by heavy demand in memory, specifically DRAM and high-bandwidth memory, alongside the rapid adoption of advanced packaging. KLA isn't just growing, they're becoming more efficient. Non-GAAP gross margin reached 62.6%, which is 60 basis points above guidance. This was driven by high-margin service performance and new manufacturing efficiencies, leading to a strong 42.8% operating margin. When we break down the segments, semiconductor process control is the undisputed leader, accounting for 91% of revenue at $3 billion. While PCB and specialty process saw declines due to business exits and lower China volumes, the core business is thriving on 2nm nodes and HBM demand. The geographic map is shifting. KLA is decreasing its reliance on China and Taiwan, largely due to US export controls and timing fluctuations. Meanwhile, Korea and North America are accelerating, now making up 14% and 12% of revenue respectively, due to heavy memory investments. KLA is essentially the toll booth for the AI hardware boom. AI infrastructure requires flawless manufacturing at the atomic level, making high-intensity process control mandatory for HBM and advanced packaging. This is why KLA is aggressively expanding its market share in wafer fab equipment. Their balance sheet is a fortress. They hold $5.21 billion in liquidity against $5.89 billion in total debt. More importantly, the debt quality is excellent, with a low 4.67% average rate locked in and a very long 18.6-year weighted average maturity. Cash generation is at record levels, with $1.26 billion in free cash flow this quarter. They're putting that money to work for shareholders, returning $797 million via buybacks and dividends. Notably, cash from operations significantly exceeded net income, a sign of high earnings quality. Looking ahead to the March quarter, KLA is targeting revenue of $3.35 billion. They expect the core WFE market to grow high single to low double digits in 2026 and have already raised inventory to $3.28 billion to prepare for this growth. The bull case centers on KLA gaining market share and riding the wave of unavoidable AI and HBM spending. The bear case warns of a 75 to 100 basis point margin headwind from rising DRAM costs and persistent geopolitical risks from US export controls. There are red flags to monitor. Stock-based compensation grew nearly 20%, which is much faster than revenue growth. Additionally, R&D spending has been bumped to $384 million. While necessary for their AI edge, it does limit near-term operating leverage. To summarize, execution has been flawless, with AI acting as the engine that offsets any legacy weakness. While China restrictions and rising component costs are real, KLA's record free cash flow provides a massive buffer against these risks. So, what's your verdict on KLA Corp? Does the AI tailwind outweigh the China risks for you? Drop your thesis in the comments below, and don't forget to like, save, and share this video. Follow and subscribe to ZinvestZ for more smart investing insights. Thanks for tuning in.